Greetings, traders. Last week, as expected, the market pulled back slightly, retesting support levels we discussed in our previous technical analysis. This week is shaping up to be very interesting, especially considering the developments from the Jackson Hole meeting. It seems like the Federal Reserve is starting to buckle under inflationary pressures, and there's a growing expectation that they'll reduce interest rates in the upcoming FOMC meeting. Despite Friday's bullish move sparked by the Jackson Hole news, the overall market sentiment is still leaning bearish. Let's take a closer look at what's on the horizon this week. Tuesday, consumer confidence data. Thursday, the first revision of GDP data. Friday, PCE Index data. Moving on to the technical side of things. NASDAQ is hovering along the lower trend line of the channel it's been following since March. I'm not expecting a major rally this week, but it could retest the 23,807 level before potentially moving lower to test key support levels at 23,000 and 22,573. S&P 500 is holding strong within its channel, showing more resilience compared to NASDAQ, which is indicating a potential downside move. The index is nearing all-time highs, so there's a good chance we might see a fresh all-time high around 4,552 before we make a bearish sideways move to retest nearby support levels at 4,324 and 4,254. Finally, let's talk about the dollar index, which is looking increasingly bearish. It recently broke out a cup formation on Friday, and it's now at a critical support level of 97.49 that it's been holding since July. Based on the price action, it seems likely the dollar will retest its lowest levels at 96.778 or 96.278, a move that makes sense considering the NASDAQ and S&P 500 are both gearing up for all-time highs, or at least an attempt to reach them. That's all for today's analysis. Be sure to keep an eye on these levels this week, and I'll see you next time. Happy trading!